We'll just get everyone through.
Right. Here's the score, and then here's the points for award.
Right. But what I'm saying is you don't fill this out until everyone's gone through the event. Right?
Or however you want to.
Maybe I'll whistle.
Get Beverly up
there. I need to be able to see everybody, so everyone hiding back there in the trees, come forward. Joe Town.
Hey, Gary.
Dave Gabbard.
Hey, is there Henry Miller here?
Well, I guess I'd like to start by just thanking everyone for coming out. The weather is certainly a lot better than it was last year. So I know the guys from the beach came up last year in shorts and t-shirts expecting it to be 75 degrees and sunny, and it was about 50 degrees and the wind was blowing about 30 miles an hour. So definitely a little more cooperative this year. The first thing I'd like to do is just, we have two of our colleagues who are really going through some personal issues with some health within their families, Chris Harris and Linda Taylor. So I think probably everyone pretty much knows getting a little feedback here, pretty much knows what's going on there. Chris Harris's son, Sean, just unexplicably started having some brain seizures and has been in the hospital for only probably 6-7 weeks now, and the doctors really don't know what's going on with him. So just ask that you continue to keep Chris in your thoughts and prayers, and Sean and that entire family. And then Linda Taylor, her husband is going through some difficult times. I think they've detected some cancer, and it's a pretty serious situation. So I ask that you keep those guys in your thoughts and prayers. And I think there's some cards set up. Jesse and Debbie, you guys are setting some cards up, I understand, and is that right?
I got it.
Okay, Debbie has some cards that are up here. So before you leave today, please take time just to, let them know you're thinking of them and sign the card. I think that would be very meaningful for them. I'd like to recognize a couple people real quick. First of all, the folks who are sponsoring this event, Lucent. This is the third year doing that, so we certainly appreciate that. So Jerry Davis, Betty King, and Darren Curtis, if you guys can raise your hand. Thank you guys very much for your support and everything else, so thank you. This year we do have, we have this team competition, and we kind of always come within the wireless engineering and ops group. This year we have a corporate team that we're going to compete against, so I definitely don't want to see them finish first or second. In fact, there are 10 teams, so I'd like to see them finish last, if possible. If the corporate team folks can raise your hands, and I'll just, so we got Mary McDermott, Nate Robinson, Carl, Rossberg, David Coates, should be a couple more of them showing up. Denise Ramey, Carolyn Torrance, and Ken Wilkerson will also be part of the corporate team. So whatever you do, take out the corporate team. This year we got a lot of prizes to give away. So in the last couple of years we really haven't had much in the way of prizes. So let me just show you quickly. For the first place team, we have these nice button-down shirts from Lucent, and you also get a t-shirt. So the first place team gets that. The second place team gets the button-down shirts. Then we have a lot of just door prizes, whether they're golf balls, umbrellas, stuff like that. So we'll be doing those raffles at the end of the event. So it'll be the last thing we do is to raffle off the prizes. So you have to be here. You have to have a family medical reason or work-related. If you're not here for those two reasons, you can still win. But for any other reason, you have to be here to win. So you can't leave early and win a prize. Now, we have 3 grand prizes. The first grand prize is a 8900 AudioVox 8900 handset. It's a 1X handset, camera phone. It's really nice. I just got one for my wife. She loves it. So that's one of our grand prizes. And then we have 2 sets of Baltimore Raven tickets. So it'll be for the Monday night game against Kansas City. And so it'll be 2 winners. And you can take you and a guest, and we'll put you in a hotel Monday night. And so Dave Jewell's cussing me right now. So there'll be 2 pairs of those that will also raffle off. So again, you got to be here to win that, and that'll be at the end. I'm going to keep my piece real brief. I just want to recognize a couple of accomplishments. And then obviously everyone heard the big news yesterday, the voicemail that went out from Jim. We have Carl here. I'm going to ask him to come up and give his take on that, and then we'll open it up for questions and answers. But real quick, just a couple of things I want to recognize. First of all, Horizon and Sprint, we had a WNP obligation on May, I think it was May 24th of this year, and it really looked like we had all the solutions in place, and at the last minute we got thrown a curveball. And so Jean Bukeshka and her team did a fantastic job of coming up with a solution. It wound up saving the company about $1.2 million. So Jean, thank you to you and your team. That's a great accomplishment. We launched 1X data in Virginia West and West Virginia, excluding the Harrisonburg and Winchester markets. So a big marketing initiative and something that we had as a strategic initiative. So we got that done. Certainly appreciate that. And then finally, again, there's lots of things that we did. I'll touch on a number of them quickly, but big things. We had to come up and do a spectrum perfection save up in West Virginia, over in West Virginia and up in Pennsylvania. And Dan Meenan and his team did a fantastic job. In fact, the one thing that sticks out in my mind is Jeff Hoffman working on Father's Day weekend. So really appreciate what you guys did in saving those licenses. So thank you very much on that as well. Some other projects, we had the wideband DAX in Virginia West. We had the Chesapeake redesign going on over in Virginia East. That's 2/3 complete, so that's a big accomplishment. It's been something we've been working on for several years. VPU turn up in West Virginia, the SM installations over in Virginia East. We added 151 new carriers to base stations already this year. I mean, that's a significant number of carriers that we're adding for capacity, a lot of work going on, so appreciate the effort there. We've swapped out or upgraded 26 base stations. And one of our key things that we went away with last year was focusing on network performance. We want to improve network performance because really that's the most reflective measurement of how our customers view our network. So if I look at last month's data to show that we are making progress, year over year, we had an 11% improvement in Virginia East. We had a 30% year over year improvement in Virginia West and a 35% year over year improvement in West Virginia. So give yourselves a round of applause because that's fantastic. For the remainder of the year, just really 3 things there's lots of projects going on. We need to stay focused, but 3 big things going on. 2G Brew data services, we need to get that launched. That's a strategic initiative, and I know Bobby and his team are working on that. We have an OTA upgrade coming up in the 4th quarter. We need to make sure we get that taken care of. And finally, just continue to focus on network performance, guys, because the better our network performs, we see it in the numbers. We see churn is much better. It makes selling a lot easier. So the more we can focus on performance and deliver, the easier we'll make it on the rest of our team. So guys, just give yourself a round of applause, and Carl, I'll turn it over to you.
Let me just share a couple things regarding the operations, the year we're having, and then I'll make a few comments regarding the announcement yesterday, and I'm sure you guys will have some questions on that. Might be the easiest way to talk about it. We're having a fantastic year due to things that Bobby mentioned and just all the things that our 1,300 plus employees are doing. Wireline, our sister company, is having an excellent year. They're exceeding their plans. When you say things like that, I want to caution that you always have a bunch of goals. You might have 50 different things you want to achieve, so it's not to say that every single one, but when you add them all up, and then of course we look at our financials, is one of the real, ending scorecards of everything you've done. They're just having a very, very good year, exceeding their plans, customer growth, handling their OpEx, capital, etc. Wireless, we're having a terrific year. Our revenue is exceeding plan. Our OpEx, we're coming in favorable to plan. So we are very, very favorable. You know, we talk about EBITDA, that's our earnings before interest, taxes, depreciation. But also, since we got our debt lowered through the Chapter 11, we are very, very positive from a net income perspective. So the company leading up to the Chapter 11 had always lost money, and that's what happens when you're a growing company. That's not unusual. That's part of the business plan, but it's great news that we've come out of it, and the company not only is cash flow positive, meaning we're bringing in more cash than we're sending out, but also our net income, when you show it to different financial folks, is positive. Again, a lot of reasons for that, but it's positive. Everybody here participates in what we call the TIP, the Team Incentive Plan. Depending on your position responsibility, it's a different payout, but there will be a payout in March next year. We're just so far ahead, we can safely say that. And the target that everyone has, the way it looks right now, and we don't see any reason this will change, is it'll pay out about 180%. That will be a record for the company. I've been with the company 16 years, and I think we started that plan maybe as many as 14 years ago. I know we didn't have the first couple years. And I think last year was the highest percentage payout. And we had a lot of years where, you know, we'd be between 80 and 100% and thought we had a pretty good year. And, you know, and we get to 110%, we thought we'd had a great year. And I don't remember the percentage last year, but it was very, very good. But, you know, 180% is an all-time. I think our new owners were very, very fair in setting very realistic goals. So we not all have pitched together and, you know, exceeded those goals, but I think they were fair in the plan also. So congratulations to all you guys on that. Other thing I wanted to mention, when we entered the year as a company and also as wireless, the largest risk item we had was our Horizon revenue stream, our Horizon wholesale revenue stream. That makes up about 20% of the wireless revenues. So wireless revenues are around $210, $220 million a year. 20% of that, you know, in excess of $40 million, came from Horizon. So of course they went into Chapter 11 August of last year, so it was a real concern what was going to happen. Glad to stand here today. I know all of you have heard this, but we resolved that what we think was the best possible way. Sprint bought the customers in the overlap market, and we entered into a contract. It's all signed, sealed, delivered. It's a 7-year contract that began back in July at very, very good rates, and we're exceeding already what we thought we would bring in. The month of August is an example. We thought that new contract would bring about $3.7 million. It brought in $4.1 million. All right, so it's a very important part, but a healthy part. Sometimes a lot of things you're doing, you don't always totally see or hear the impact, but when Bobby talks about you folks adding so many carriers, I mean, that's for our customers, but man, when you stay ahead on those carriers, especially in these college towns, when the colleges open back up, we see the Sprint revenues in minutes go sky high. So our own minutes go up, but there's a lot of Sprint customers that must live in Pittsburgh or Washington, D.C. or whatever that go to school at Morgantown, Blacksburg, Marshall. They come in and run up a lot of minutes, and it's very, very healthy to us. So number one, it's good news we got rid of that risk, but number two, you guys are doing a good job keeping those carriers ahead so that the minutes keep clocking through, so thank you for that. The last thing I want to say before I get into yesterday's announcement is I know I couldn't be more prouder of a group of employees. Last year I stood here and talked about how proud I was that, you know, we'd gone through Chapter 11 and how everyone had just pulled together and made things happen. And we had compliments from all over the place that they'd never seen a company go into Chapter 11, employees stay more positive and produce great results. Well, we're now 1 year out of bankruptcy. And as one example, just to give you an example, we had a consultant that came in that's worked in the industry all his life early in the year. And he went around and visited with a lot of different groups. and I could name the company that he came from. He actually worked for 2 or 3 different companies, but I mean, this guy had been around, had been a CEO, a lot of different positions, so he'd pretty much seen every discipline, seen wireline, wireless, and he says, you know, I've not ever seen a company that has better people, better attitude, more positive about what they do than anywhere I've been. He said, it's better than anywhere I've been, and you guys have just come out of bankruptcy. So that's a real tribute to you guys and your peers that are back in the office today or whatever they're doing. So thank you very, very much for what you do each and every day. Additionally, Bobby mentioned a couple of our employees who are going through some pretty major hardships in their family. I think the other thing, when I look around and see what our employees do for each other when they're going through hardships, also participation in things like United Way, all kinds of stuff you hear about that groups of employees all over the company participate in, help the communities, help their peers. It's just pretty unbelievable, the group of employees we have. So again, thank you. Now, the news from yesterday. Let me go back and give you a little bit of history so that everybody's sort of looking at a picture here the same. When we went through bankruptcy, we probably talked a little bit about this last year. You know, we had about $900 million of debt. Then we had our stockholders. In the hierarchy, when you go through a Chapter 11, is the debt holders have the highest priority. So we had what was called senior debt with bankers, and I'm going to simplify this a little bit, but then another big chunk underneath of that was with bond holders. Okay, they usually get a little bit more interest on their money because they're less secure. Okay, so they're taking a riskier position. Then you have your equity, your stockholders. All right, so when you go through a Chapter 11, you value the company. You know, experts are pulled in and you value, and you say, what's the company worth? And you start taking care of the priorities first. Okay, so the senior bankers, they were willing to stay on and take debt with the company, so they just went over and took debt in a new company, and that was all the debt that we had, about $280 million. Then next was the bondholders. So they had to take equity in the company. They had to become, where they were creditors, debtors of the company, they had to take the equity. These guys, these companies, Morgan Stanley and Capri Research, the funds that they had this money in was not equity funds. Okay, these financial guys, they'll have money to be put into equity in companies, but they have one group that manages over here, sort of like Wireline over here, you know, and they'll have another group that manages their money that they want to invest in debt facilities. So all of a sudden, these guys were forced, you know, to become our equity owners. All right, so that wasn't all a bad thing. They were on board, they believed in us, but we knew at the time that that wasn't the business that they were in. All right, so our best guess at that point in time is that there are 2 things needed to happen. We need to execute as a company to show that things were in good shape, but also the telecommunications market needed to come back. Values were an all-time low. So our guess is that they probably would be comfortable being equity owners for a couple years, and then they would be looking for an exit strategy, somebody to come in and take their ownership. All right, good news, I guess you could say. We have done better than what we even projected we would do, which is very, very good. It's healthy. But also the telecom market has come back. Values have come back, not to where they were, but much quicker than what people thought. And that's also good for our industry. So what's happened over the last 2 or 3 months is other funds that invest in equity and debt have been knocking on their door saying, hey, we know, and everybody out there, these financial guys, they know what's going on. So what I'm telling you, they all know. So they knock on their door and say, maybe I'll wait for the train to go through here so I'm not competing. Give me just a minute here, hopefully. All right, maybe I'll try here, get a little quieter. All right, so, all these financial folks out there in the world, a lot of them are up in New York. They know what's going on. They know that there's these two funds sitting there that own equity that really would prefer not to own equity. So they began knocking on their door, calling, saying, hey, if you want out, we'd have an interest in taking a look at Ntelos being in. So our owners have decided it's a good time to consider those folks out there that have been knocking on their door. And that's where we're saying, I guess the way the announcement came out there, our equity would be refinanced. We would go through, if this happens, a change in control, and you would have new owners in. But the message is, we don't think, and I will tell you one thing about our company, and I think you saw this through bankruptcy. You can't always share every single thing, little thing that's going on, okay, for a lot of different reasons. But I guarantee you, we share more with our employees than any company that I know out there, and we share it sooner. We don't wait until after things happen. So, we believe what will probably happen here, based upon what's going on and the calls that have been taking place, is that these new guys will come in, different ones of them. There's probably 25 plus different funds out there that could be involved. And they'll come in and they'll do some due diligence, take a look at the company over the next few months, and then they would just talk to these owners and decide, what they would offer for the company. And by the end of the year, we would know whether we would have new owners or not. Now, so these are key points to me as I look at it. Somewhere around the end of the year, we'll know whether there's going to be a deal, a change in control or not. If there is, there may not be. The owners may say when they listen to them, hey, we're bullish that Ntelos is doing well. The market's going to recover even more. So, yeah, they're interested, but they're not interested in paying me what it's worth, so I'm not going to do it. They might get an offer they would take. All right? We will know that around December, January, we believe, if everything stays on track. And if there was a change in control, the actual event probably would happen mid-year of next year. All right, it just takes that long to get FCC, Mary McDermott here, our legal counsel, has to get FCC approval on all our licenses and everything. You've seen the ATT singular merger as an example. See how long that's taken? That's just to get approvals. That's not anything that happens after the fact. So we think our best guess is that one of these funds, if there is a change in control, will be the new owners, that you guys wouldn't even know there was any difference. Okay? I mean, we had a change in control last year where we had new owners, and you really didn't see much difference. So that's what we think will probably happen. Now, I'll go ahead and ask the first question or two that I know you will ask me, and I would if I was in your shoe. Well, wait a minute. Couldn't XYZ company come in and buy you? All right? That is possible. All right? We don't think it's very probable, but that's possible. If an operating company comes in and wants to talk, the owners, put yourself in their shoes, they're not going to say, no, I won't talk to you. But here's a key point I can share with you. Those guys, if they wanted to buy us, the best time to buy us would have been coming out of bankruptcy, because you're valued very low. Nobody tried to do it. Nobody's been knocking on our door other than these financial guys. So how do I feel confident stand up here telling you high probability we think it's the financial guys, if there's a deal, is because of all that? I can't tell you, and if I did, it wouldn't be worth very much, that it's not, that it is possible that it could be an operator. Again, nobody's been knocking on our door, nobody's been talking to us. Think about it. If you think about the operators out there, who do you know that's bought anybody? Okay? If anything, the only thing that's happening is companies are selling parts and pieces. Okay, like a Verizon is selling rural wireline lines big and crazy, because they're not real bullish about rural wireline. We've got a big piece of our company's rural wireline. Okay, so that's the other thing. We're sort of, I guess, unique as far as having wireless, wireline, internet, etc. Not to say that you couldn't be a fit with another operating company, but it's not like you're a real good fit for anybody out there. I'm just going to take one example and comment on it because I keep hearing it. And I probably shouldn't even go there, to be honest with you, but I'm going to do it. I hear Sprint mentioned the most because Sprint, doesn't have a network in Virginia West, West Virginia, and they pay us a lot of money. Sprint Wireless hasn't bought anything that I'm aware of. And with the contract that we have where they pay us $40 million a year plus, they in essence would be paying a lot twice, if you will. They're going to pay us a lot of money. They have to pay us a lot of money over the next 7 years. So there's no indication that Sprint has any interest in buying anybody. If Sprint wanted to buy operating companies, they had the prime opportunity to go after their own affiliates that are integrated with them, as most of those went through Chapter 11. And they came out and publicly said, we're not interested. They feel if somebody else can put in the capital out here and they can use it like their affiliates are us, that helps them because they can take their money and put elsewhere. Now, I know it may seem surprising, but every company that you could possibly think of is working to get their debt down. Verizon is on record that their debt is too high. All right, Sprint's on record their debt's too high. You've probably seen Sprint's now talking about selling their towers. They're not selling their towers because it's a good time to sell. It's actually a bad time to sell. The markets used to be much better, but they're getting beat up because their debt's so high. So with that, you could probably go through examples like that all day long. Let me just stop, and who has the first question? Don't ask too hard a question now.
What's the chances they'd split markets up?
So the question is, what's the chance they'd split markets up? To be honest with you, anything's possible. When you're going through transactions like this, for our size company, it's not very practical. If you're real big, like Adelphia Cable is currently on the market, and they're pretty large compared to us as far as number of subscribers out there. So they said, here's a cluster out in Los Angeles, and here's a cluster here. But for our size, it's not very practical. It's possible.
Carl, a lot of times when they break up companies like that, it's companies that have to sell, like Adelphia, because of the bankruptcy. And we can never know, but I think that the price our owners are going to want for our company, it's not going to be the kind of opportunity that those breakup people would see as attractive, because I think the price will be too high.
Right. Everybody hear that? Okay. So as we talk about examples, I'll try to respond. Anything is possible, but some people have asked, well, what if could wireline and wireless be split up? So what if it was a company that somebody wanted wireless and wireline? That's possible. That one's, maybe a little more possible, I think, than even splitting up wireless, but you never know. We don't think that's, I guess if you back up what we think the large possibility over here, very, very large, is a financial buyer. And if a financial buyer pays what they'll have to pay to buy the company, they're probably not going to be able to make any money by turning around and selling parts off. Meaning they got to buy it and they'll look at a 10-year plan of our wireline wireless, and they'll put in a bid based upon what they think these operations will do over the next 10 years. They'll have to pay, based upon that. So to say they could pay that and then turn around and sell it to somebody else is not highly probable. Okay? Now, could they 5 years from now buy it all, and 5 years from now wireless has got a higher growth rate than wireline? Could they say 5 years from now we like the high growth rate, but we don't like wireline that has a lower growth rate, and later down the road? Again, anything's possible, but it'd probably be more probable than splitting it up today. Yes, sir.
When we get bought out, do you think they're going to want to change the face of Ntelos, change it to something else, or will it become a subsidiary? Or
And so I'll just repeat exactly the way it was said. If and when we're bought out, would they want to change the face of Ntelos? Would we become a subsidiary of somebody else, et cetera? What I'll start out with is these financial buyers that have been knocking on our owners' doors. Most all of them just have funds out there where they want to buy and stay the same. Now again, when I say there's a bunch out there, there's a bunch out there and there's a bunch interested, but that doesn't mean you'll sell. If you put your house on the market tomorrow, any of us that own a house, there's probably a lot of people interested, but how many want to pay the right price, right? So it gets whittled down pretty quick. So the financial guys that have been talking have all said, maybe not all of them, but majority, we like what's going on and we would like it to stay the same. There are, if you go out and look around, there are some financial buyers out there that had bought other small telecommunications, mostly wireline. Isn't that a safe statement, Mary?
Yep.
So you could have one of these entities that has some other telecommunications, and most that's wireline. I can't even think of any wireless that any of them has. There's not that many small regional wireless companies other than the Sprint affiliates, and then there's a few other mom and paws out there. If one of those guys that has other telecommunications holdings, they don't have a big enough brand name, the one I'm thinking about, to want to bring it in and change the Ntelos name and brand. Okay, so again, high probability, who we're looking at to think how it would happen, is you wouldn't see a change. Now, again, what percentage is it? We think it's very, very, very small, but pick your names. I mentioned Sprint, Verizon, Alltel, US Cellular. If any of those guys did do something, then naturally, if it's one of them, you're going to use their name.
How about an employee buyout? How about an employee buyout?
I'll tell you what, that's an excellent question. What about an employee buyout? I wish I could better respond to that, but just the other day I was talking to our CFO, and he just sort of, Mike Moneymaker, he just sort of mentioned that in passing. It was not a serious comment, and I will tell you, Jim Corforth, our CEO, Mike Moneymaker, our CFO, they're doing pretty much nothing but working on this. Mary spends a lot of time on it. Donna Persing spends a lot of time on it. I spend most of my time running the wireless business. Dave Maccarelli spent most of his time running the wireline business. So we go into meetings every so often and get updates, but we're not involved with it as much. But that hadn't been discussed, and I read an article just this week how there's so many more of those that have taken place across the country, and I will go back and ask about that. But I think part of the problem is just the value of the company. I think if you look at the value of the company today, I think we're talking probably, I'm just going to throw out a ballpark figure, and you probably ought to use a range when you talk about things like this, but maybe $750 to $850 million, somewhere in there. So 1,300 employees.
Give me a check, Andy.
Do the math.
Don't we get
Might get Bobby to put in a little extra. He told me he got into the rental market and made a lot of money here recently. But it's a good question. It's come up just here recently, a couple people I've talked to, so I'm gonna go back and ask what the thoughts are, just to, and we'll, what's that?
We wouldn't have to pay it all at once.
No, what you'd have to,
Yeah, to the owners.
you probably need a lot of debt.
Yeah. You need to find a good bank.
How's your FICO score? We can claim bankruptcy after a little while.
The ones I'm aware of have always been much smaller. I'm not aware of any, and I'm sure there are some out there that are that big, but I'll still go back and check on that. It's a good question. I like the way you're thinking. What else? Mary, do you have anything you want to say about it?
I I just want to echo something that Carl talked about, and that is that our current owners are very happy with us. I mean, when you think about where they were going into bankruptcy, I mean, this has been a big success story for them. And this isn't an indication that they're unhappy at all. What it's an indication of is they're so excited about how well we've done and that the values are coming back. They're going to go out and take a look. But I think on a lot of the questions you guys have answered, one of the basic things you got to remember is they are not going to sell this company cheap. I mean, and they may very well, just like Carl's example with the house, hang on to it. Because it's a little funny for them to have this equity in their debt portfolio, but it's not that big of a problem for them.
So you're
And so
saying,
I think that's a big protection for us as far as, you know, not breaking up the company, being excited about what we're doing, capitalizing on the Ntelos momentum, because they don't have to sell. They can hang on, and they will, unless they get, you know, a price they think is very fair.
so you think they may be trying to feel out the market to get an idea of what the market thinks our company is worth?
Yeah, and they have their own feelings about, I think, which they don't share completely with us or anybody else, because that's part of this process, about at what point they'd sell, but they don't have to sell, and they're happy and supportive of our plan. So we'll see how this goes, but there won't be, I'm confident that some of the bottom feeders and the breakup people just won't be in this, because our owners, they don't have to make a move if things, you know, if things don't line up the way they want. So.
Hey Carl, one thing to mention is like our 2005 capital plan, and all of that is, none of that is affected by this, so I think that's probably
That's
good
right.
to mention that.
Yeah, that's a good point. Bobby mentioned that our 2005 capital plan isn't impacted by this. Actually, what we're doing with the 2005 capital, we're going through the process right now, and it should be finalized, approved early December at our board meeting. But we had a 10-year capital plan coming out of bankruptcy. So we went to our owners here a while back and said, hey, we haven't, over the last few years, we haven't been expanding our footprint and improving our network, some areas we need to improve it. So, you know, we're showing you, here's the good news is it made it easy for Jim and Mike and myself to go to them, because we could say, look at these results. Okay, you know, if you're behind on your results and you're going and asking for more, that can be sort of difficult, but you guys made it very easy. We went in and we said, look at the results, we're ahead, so give us some more money because we'll make it pay off. So what's in the plan right now is $15 million above and beyond. What was the original?
40 million.
40 was the original, in the original plan, so we've asked for 15 more million in just 2005, all right? And then we asked for 10 million more the next 2 years, so we asked for 35 million more, that close?
Yeah.
The next 3 years. They verbally have said okay to that. We're just going through what I'd call the final processes, and you know, I don't see any reason why it won't be approved, you know, at the December board meeting. So Mary had a very good point. They're very, very positive. They've actually said that, again, these are debt guys. The funds are intended for debt, and it's a different discipline. But they've said, you know, whoever the new guys are that come in, we're assuming they'll probably do some bonds, so we would turn right around and put money into the bonds. I don't know if this is a good example. I was trying to think of an example to compare this to. Some people get real dedicated to their cars, what the manufacturer is. You know, I'm a Ford man, I would never drive a Chevy, you know. So what if you're, let me use this example. What if you're a Ford man, you're a debt man, Ford man, okay? You would never ever drive anything else, okay? But you got some investment over here, or maybe one of your Fords in your fleet is wrecked and through some deal or something, they give you a Chevy. Now it's a good Chevy, but it's a Chevy, and you just don't really feel right in it. You've never done it all your life, you never felt right, you don't feel right, but guess what? Man, it's giving you better performance than your Fords. But now somebody comes along and says, hey, I'm willing to buy that Chevy and pay the right amount of money for it, So you could sell that and go back and buy a Ford and you get more in your comfort zone. So maybe a dumb example, but that's about the magnitude of what's going on. Good questions. Any other comments or questions?
What kind of bills they thinking about?
Builds, the 15 million. We've had a lot of people. I know some here, and then we pulled in sales. We pulled in the David Coates people in retention churn. So we try to take everything that the network side of the house knows as far as, hey, I got areas out here I need to improve. You go over and talk to sales, and what are they hearing? You look at your churn, retention, where are people leaving you because. So they take all that and put it together, and then they start coming up with priorities. So this is one I got an easy answer for. They keep it all secret from me until is it next week we meet? And then we go into a room for about a half a day and go through it. And you guys in West Virginia last year, Joe told us this great story about an old car his dad had. And man, he was so convincing. He was about the best salesperson I'd heard in the last 5 or 10 years. Now, not too many people call Joe a salesperson, right? Everybody says, man, the guy's sharp, he knows his stuff, but I hadn't heard anybody call him a slick salesperson until we got in this meeting with him. And he started telling us this story. Dave gave up. Dave said, I can't compete against that. Seriously, we go in the room and there's some interesting conversation. Joe will have to tell you his story. And then we come out with the priorities. So we won't know, we won't get it signed off till December, but I'd say after we have that meeting next week, shortly thereafter, I'm assuming, probably some information will start. As a matter of fact, I think we need to get started on some of the new sales sites as far as begin some searches, et cetera. So some of that information will be coming out right away, even though the final plan won't be approved.
Do you have any idea about when
Know about
what kind of time frame is know when what we have got done?
on the Capitol? Yeah, we'll, if everything goes as planned, early December, we have a board meeting, and it would be finalized then. Now, the group has a priority list I know comes to me that they'll discuss with me next week. And I think after we discuss it, we'll go ahead and agree to move forward on some of the stuff that, where we won't have to spend very much this year, but to get ready to move forward for next year. I know I've heard, all right, so I'll get myself in trouble here, but
Don't say it.
I know in West Virginia, maybe I shouldn't say it, huh? I ought to keep quiet.
I-64.
I-64.
I-64. Hey, I tell you what, who's the keeper of the list so that if anybody has any comments today, they can turn them in? Talk to Bobby. He's not on one of the teams today, so you can bug him while he's standing around watching all of us work hard. All right, thank you guys. If you got any more questions, I'll be around today. Just don't interfere when I'm concentrating on one of these events. A lot of pressure today.
Okay, appreciate everyone coming. Carl, thank you very much. Lunch is here on time this year, so we'll go over here and eat. The games are going to start at 12:45 exactly. We got a real tight time schedule, so we're going to try to get everyone out of here by 3:30. We'll probably come back here at 3:30 and then go through our raffles, okay? So just everyone have lunch.